Well, hello again, everyone, and welcome out to the Currency Room. And this is Ankit here from Maverick Currencies, and we joined by Imre, and he'll be chiming in with his outlook. But let's get started. It's quite a week last week, and there's a lot to go over. And again, this is where we got a lot of volatility, but not a whole lot of change from the market. So equities are down for the week, but they did recover about 3.5% from the bottom. So we are exactly at the same point where we were last week. We were looking for a breakout, but early in this week, we got to pull back and then a bigger a reversal as well. So a lot of hammer candles that I was noticing on those weekly charts. So I think next week it will be interesting. We might be coming into a point where a lot of these negativity is already priced in and we start to move higher, but we still need to break those areas to really mark a bottom. I mean, we are still going sideways back and forth. So it's still a range bound price action. But for us to move higher, we need to start making higher highs and higher lows. And it doesn't seem like markets are there yet, but we might be seeing this coming in the coming weeks. Outside of that, there's a lot of action from the central banks. Again, RBNZ, they raised rates by 0.5%, and that was as expected. So we didn't really see a big impact on the Kiwi. A lot of times we get this big movement when there's a surprise. So no surprise out of the RBNZ, but look at that Bank of Canada. They surprised everyone with that 1 full% rate hike. So that was higher than expected. They're looking for a 0.75, and they came with a full percent. So biggest increase since 1998. And that also caused a lot of stir because then now here we are, FOMC, that's due in a couple of weeks. Now expectation for the Fed to raise hike rates actually went up as well as we got a pretty higher than expected CPI print. Now, this is where we talk about this before. Corey has touched about this quite a few times. That we've seen quite a bit of change in the past month or so, especially when it comes to commodity prices. And that is actually what's been contributing a lot to the inflation figures. So, are we just about to see a change in the next report? And again, we could be getting a bit much better report in the next one, but we are still seeing these numbers that are being pointed out from previously that are pretty strong. But we've seen oil has actually broken down. A lot of commodities have broken down. So I think that this could be just marking a bit of a peak inflation. But there's a lag, there's a delay, and that's what really happened in these reports that they're looking back, not looking forward. So we have to wait a bit to get a bit of a positive data. But outside of that, central banks, we have our Australian employment report. I mean, look at that report. Actually, much better than expected, 3.5 versus 3.8, and their employment change was 88,000 versus 30,000. So big positive number from the employment report in the Australia. So I mean, at this point, we are not really seeing these negative numbers that are coming out from this job market. I mean, everything is holding up. The markets have been moving a lot based on inflation expectation and the central banks. But outside of that, we haven't really seen these numbers weaken as much. So we might be seeing, these currencies get a lift a little bit, especially if the markets start to move higher. I think a lot of these currencies like the Aussie, even the Kiwi, they're primed to go higher. But for that, we need that market to change, which we haven't seen so far. So let's not get ahead of ourselves and start to prepare ourselves for what's coming next. I mean, we're playing the same story for the past 2 or 3 months, but we might be seeing a change in that story in the coming few weeks. So we have to be prepared for that. So let's take a look at last week's review and take a look at what the percentage change was, what the performance was across the board, so we can take some cues from what happened and what we can expect in the upcoming week. So let's just start with the percentage change. I mean, the S&P is still down 1.2%. The world stocks or markets are down 1.76%. So we're still seeing a down move across the board, but this is where it's all relative. I mean, where we were in the middle of the week, I mean, that would have been an ugly, ugly week. But the fact that we have actually kind of come off from those bottoms, it's actually giving us a bit of a chance, bit of a hope here that we actually might be seeing a bit of a reversal coming. So as you can see, we are having in this downtrend, a massive downtrend since March, and each rally has been broken actually broken lower instead of breaking higher. So we haven't seen a change there. So for to market change, we need to see a higher high with a higher low. And you can see right now we're kind of going sideways. 3750 on S&P, and the on the high side is 39. I mean, we as soon as we break above this, I mean, we are above the 20-day moving average, but still below the 50. We need to get above the 20 and the 50 to really mark a rally. I mean, and we saw that back in March where we saw that very impressive rally. But I mean, we haven't really seen any impressive rally since then. We gotten above the 20, but we haven't really gotten above the 50. So if you're trying to figure out where the next market move is, I think we just have to look for the breakout. And again, this is where we could see a sideways range bound price action for a longer time before it breaks out. I mean, it doesn't really need to break out to the upside. It could go sideways, and that's exactly what we are seeing right now. So if you're trying to be ultra bearish, I think it's time to take your little chips off the table. If you're trying to go ultra bullish, I think it's still early. So you're kind of in the middle there where we need to make a change. But again, for that, that waiting is the game, name of the game here. So, so what do you think? Again, Imre's joined with us. Imre, what do you think of the markets here? What's your outlook in the coming for the coming week?
I think you said it best. This isn't the time to be extreme in your bias, whether you're optimistic or pessimistic about the market here. This is what I call a trader's market. And I remember the conversations that you and I have had, Ankit, since the COVID flash crash in March 2020. And as the market started rebounding, I remember so many times we were saying, and hey, this is the time when the so-called dumb money, amateur traders, retail investors that are excited by things moving, this is the environment where they can make money. It's a time for professional traders to accept that, take a step back, and realize that without a ton of volatility, it's hard for us to find those really big opportunities. It's a time where you're swinging for singles and doubles. You're probably not going to hit a huge home run. Now, however, with the volatility that we're seeing, there's so many opportunities. You just should not overstay your welcome. And I agree completely. I think the Aussie, the Kiwi, primed for very large reversals, but we're not there yet. So it's okay to have a forecast in mind, but when it comes to trading, you actually have to trade the market that's in front of you, not the bias that you have in your head. But anyway, long story short, I think this is a trader's market, which should be very good for all of us. So it means keep things on the slightly shorter side. Don't overstay your welcome, and let trades pleasantly surprise you. If you're in a winning trade, let it surprise you by having it turn into a monster, but don't have that expectation, and you're going to hit that home run as soon as you place the trade.
Yeah, absolutely. Well said. I mean, I think, yeah, markets are at a unique point where, I mean, we have seen things happen this year that, I mean, as a currency trader, I mean, you probably haven't seen in your career because, we're hitting these levels. But again, if you look at beyond that, it also provides a good opportunity as well as a trader. We can make that shift. Who cannot make that shift if you're those not the trader, but if you're like the amateur trader that doesn't understand, then you're looking at things one way. But I think these markets, I mean, we could have a blasting second half this year, but for that you have to be able to adjust with the market condition. And as a trader, that's what we are conditioned to do: change with the markets. Which again, I'm very happy to see the market conditions like this. So let's just talk about last week's percentage return and in the currency market. And as you can see, that there is decent percentage return. I mean, 2021 was a good example where we just didn't get that big percentage return. But now we are. I mean, it's volatile markets, like Imre said. This is traders market, so we are seeing a massive move back and forth. I mean, if you look at dollar, I mean, dollar is actually still posting a nice 0.94%. I mean, at a point, it was actually up about 2%. So it kind of shaved off like about a 1% off its move there. And there's definitely has been a lot of movement back and forth. Same thing with euro. I mean, euro was actually quite weak in the early part of the week, and then actually is down just a slight bit. We're seeing a bit of a move in the pound, but percentage return, if you pair, let's just say the yen against the dollar, or some other movements, I mean, there has been definitely a good movements that's taking place across the board. So as a trader, you just have to keep an eye on that velocity and see what's really moving. I know Aussie looks kind of flat for the week, but if you look at those intraday charts, I mean, this things were back and forth. I mean, CAD at a point was actually up about close to 1%, and here it's actually closing lower. So there's a lot of turns that took place this week that we have to take a cues from and see if there's a bit of a follow through to these moves going into next week. So we'll take a look at that one. But outside of that, the surprise that really happened this week was Swiss franc was stronger. I mean, Swiss franc really lost his kind of. I mean, Swiss franc was really on this rise for a few weeks, and then in the past 2 weeks, it really lost its sort of movement there. So we got a bit of a surprise movement in Swiss franc there. But outside of that, I think what's really been playing is that trends. Dollar strong, CAD strong, but we have to look at this and see, well, is this coming to an end? I mean, are we about to see a regime change in these markets? So I think next couple of weeks, as we get the ECB press conference next week and we got the Fed the following week, I think once we get past those couple of weeks, there will be some good opportunities coming up on the horizon. And again, it's a similar story with cryptocurrencies as well. I mean, we talk about cryptos being down, and I mean, if you look at this week, again, doesn't look that great. I mean, BTC only actually almost flat for the week. But again, if you look at those weekly charts, I mean, we have seen some reversals that took place this week. So I mean, that's what we need to pay attention to. Is that if those reversals have some more legs behind it, then we need to be part of that regime change. Ethereum looks the best out of all. Again, Bitcoin and Ethereum, I think those coins probably will recover the most when this recovery take place. But so far, I think I'm happy to see the Ethereum doing really well. So next week, those are the Ethereum will be the one that I'll be paying attention to in the cryptocurrency world. So let's do a quick market analysis. Let's take a look at some charts and then talk about the upcoming week's outlook. So as we take a look at the S&P 500, I'm kind of going with a +1. I mean, like I said, this is a sideways market. I'm not looking at this as a directional market. I'm keeping an outlook as sideways to move higher. I think we have, or it seems like the markets have kind of made a bottom in the short term. I mean, look at that. Each time we've tried to move lower, we were able to make a recovery. So at this point, sideways to higher is what I'm looking at. But again, that could take a little bit time for that to happen. But we know patience is the name of the game here. Same thing with the world markets, following the very similar pattern. I mean, this seems a little bit more weaker. I mean, we still have the support here. So we're seeing a bit more lag in the European markets, but I think US markets might be leading the broader markets overall. And in the Bitcoin, in the currency world, I mean, we actually have a bit of a base that's forming, I mean, which is very similar to what we saw back in May to June. And we've seen a big drop since then. Again, still looking at sideways to move higher. Each time we're pulling back, we actually are rallying a little bit, and we need to break these resistance areas or get above at least a 50 to give us a reversal sign. I mean, you can see that back May and June, we never got above the 50. So maybe use the 50 as your indication that if we get above it, we could see a bit of a more rally to come into the markets. So +1 is really the outlook here, and again, in between, market might throw some curveballs and move lower. But again, I think if we continue to see these recoveries take place, that we need to just continue with that theme in the markets. So actually, let's actually take a look at next week. I don't have the schedule up here. Let's just jump live into the into Forex Factory so we can take a look at it. So next week, it's only one central bank announcement that we have, which is the ECB press conference. But outside of that, we have the governor speaking. I think those won't be as a market mover. What I'm really will be looking for is the CPI figures. Again, they're month over month. Expectation is that, of course, they will be running hot. So I think that still will provide a decent opportunity. I mean, we have on a Sunday, we have Kiwi CPI, and then on a Wednesday, the pound and the CAD. But I think the most important event for the week is really the ECB press conference. Look at that. They're looking to raise rates by 0.25%. Now, if you take a look at the performance in euro hasn't been running on this. So the thing, is the markets are looking for some disappointment, or is the market underestimating the ECB to make a change? I think euro is it's at a bit of a cross point over there. So we have to pay attention to that, and then look for that news event as a catalyst for the euro. So I think markets, again, likely to go sideways to go higher. If we do break above, that's a bullish signal, and then to a bearish leg down. Again, this is a similar statement we had last week. We just didn't get any breakout this week. but we're still at the same exact point as we were. ECB, what I will be paying attention to, I think that will be the highlight trade for the week. And outside of that, the CPI figures on economic reports is what I will be paying attention to during the week. So let's do a quick currency analysis and then take a look at some charts and see where we stand from both the trend score and a velocity score. And let's start with the cryptos there. I mean, cryptos are sideways. I mean, velocity is actually getting a little bit better. You can see that on a velocity we got a +2. We haven't really seen a big change in the trend here. So I think if you're looking for a trend, you need some confirmation on this one. If you're looking for a short-term trade, I think Ethereum is what really is catching my attention here. I mean, look at that. We've been in this downward pressure here, and now we are rising to a +2 or +3. And even though if you look at the resistance, I mean, this is the closest thing to the resistance here, not the other charts. I mean, the Ethereum, I think, is it looks like it's prime for a breakout. So if you're looking for hunting on the cryptocurrency side, I think Ethereum looks the best here. Imre, what do you think of the cryptocurrencies here? Is there anything that you like?
Yeah, I can't believe I'm saying this, but I think looking for opportunities to buy on dips will make sense. Ethereum unquestionably had the stronger recovery here. That being said, just given the historical correlations in cryptocurrency, I don't really see a sustained recovery in the so-called altcoin market without Bitcoin lifting as well. So it's really a question of where do you see the relative strength, and if crypto does make a broader based recovery, it's the best plays are probably going to be in Ethereum. This is where it gets tricky though. As a trader, we like to look at the charts, but then when it comes to the actual business of trading, there's all these other factors we need to consider. So I'd want to see, is one cheaper than the other from a transactional point of view? Are the spreads going to be tighter on one or the other? And what's your plan going to be like? When you're trading a spot market without leverage, it becomes a very interesting proposition, very interesting indeed. So you have to be very careful about where you place your stop and how much you think you can get out of the trade. I don't like trading markets without leverage. so for me, if I'm trading, crypto through our trading platform, I really want to be sure that I can be in a sustained move for quite some time, 2 to 3 days at the very least, because if I'm only in the trade for a few hours, I'm not going to get anything out of it. So I would say just keep that in mind. My personal preference would be to see a confirmed breakout first, and then let's see if that breakout can hold, and then buy the dip. So for me, I'm taking more of a ready, aim, then fire approach rather than just looking to buy straight on dips. But I am saying that I think if we are nearing a bottom here, then the mentality is going to have to shift a little bit.
Yeah, absolutely. I think what I like to call it is just a regime change. I mean, until you see a change in that regime, it's you can try to get ahead of the trade, but sometimes the confirmations will save you a lot of headaches. So if you're trying to do it, like maybe leg in, that would be a way to go. But I mean, if you look back, I mean, how many times you've tried to make that bottom and it just fails and fails, and it's very tough. And so you want to wait for that and then not get burned over time. So
the other thing though, Ankit, and it's worth mentioning for our fiat currency traders primarily here, if we do see a recovery in crypto, it's likely that would coincide with at least a fairly significant setback in the fortunes of the US dollar, right? So now it raises another question. What's the opportunity cost of tying up capital in crypto if the dollar is going to stage a major setback against the other major currencies we look at, like the Aussie, the Kiwi, the Euro, for instance, the pound. So if we see a broad-based reversal in the fortunes of the dollar, my personal hunch is still going to be the better opportunities are going to be on the Forex side rather than the crypto side. That's just my 2 cents, though.
No, absolutely, I agree. I mean, if you look at just in the hindsight, 2021 and 2022, I mean, crypto was the easiest market last year, and the currency world was actually not that easy because we were just not moving as much. And I think it's the script has flipped when currency trading has definitely been more lucrative right now than the cryptocurrency. So let's just talk about the currency world here, and let's take a look at dollar, the king dollar. And you can see that the dollar, if you are on the long side of it, that's really been the trade. This week, again, if you take a look at the daily chart, I mean, we did go higher after the CPI print. and then we actually did pull back a little bit here. So I mean, right now there's no signal for dollar reversal yet. Like I said, for regime change, we need to break below the 20 to 50, and you can also pay attention to the velocity on a 4-hour chart. I mean, right now on a day like today, we've seen a bit of a pullback, but the question is that do we still continue to see rallies of the pullback? And I think if that's a little bit of an early call here, the dollar short might be couple of weeks away. I mean, we have the Fed that's due in 2 weeks, and after the CPI prints, the call for raising rates by 1 basis points went up quite dramatically, and then actually after that, it did pull back a little bit after some comments from central bank governors. So I think the dollar likely to maybe go sideways, maybe go back and forth in the sentiment, but we still need to wait for that Fed meeting to come out of the way, go out of the way in order to look at something else. So, but I think in meanwhile, what's moving? Look at the yen. So I know like the yen back in April till May, we actually got a nice little rally here. I mean, this time we just got a sideways range. So are we setting up for another break? Because a lot of traders I've talked to, we got a big break here, we got a big break here, and everybody wants to do this, wants to trade this. But this is difficult to trade because things have gone sideways. So if you're looking for a break, I mean, look for the support to break. I mean, we have the velocity that's moving. We need a trend to break as well in order to move down. But I mean, right now, as all the central banks are raising rates, I mean, this is a policy divergence that we're sitting in. And unless we get a change from Bank of Japan, or we get any sort of central bank intervention, which I've talked about in my videos recently, I think as the dollar yen continues to break higher above that 140 area, I think that's where there will be an increased chance for intervention. But I think that's a bit of a risk in the yen here that I'm kind of overseeing. But if you just stay with the trend and just use the stops, make sure you're using right position sizing, I think the short yen is still the right call here. And especially if it breaks below the support, I think there'll be further downside. But outside of that, I mean, look at Swiss franc. I mean, this Swiss franc was a bit of a puzzle here because it was doing so well. It did pull back, and now it's rallying here. The question is that is this a bear rally? Is this a rally where we make a lower pivot high and move lower, or do we actually get back to the previous high? I think it's still a bit of a coin flip here. I'm not so excited with playing the Swiss franc as a +2 to the upside. I think I'll maybe bring it down a little bit. But if it does get towards that resistance, I think it's worth taking a shot here. So in the shorter term, the momentum is a little bit better, but this is just a 1 week move. I mean, we have seen 2 weeks of down, 1 week of up. So it's just still hanging off of this 20 moving average. So I need to see this move a little bit higher in order to get back into this momentum here. But I think we have to pay attention to both the euro and Swiss franc and see which way it actually goes. I mean, there's not a whole lot happened in the past few days here. So 1 day move doesn't really warrant what's going to happen with the Swiss franc. So I think I'll have a little bit of a question mark here going forward. And it's the same thing with the euro. I mean, look at the euro. We actually broke it so aggressively on the basket here. And a lot of times, traders are looking at this and say, well, is this a buying opportunity? But I mean, look at how anemic this bounce is. I mean, ahead of this ECB next week, this could be a do and die situation for that. I mean, velocity remains. I mean, it's just building up the energy here. What's your outlook here, Imre, on euro?
I think my outlook on the euro is pretty similar to my outlook on the yen, where I think we need one more leg of euro weakness, one more leg of yen weakness, and then I think the stage will be set for a fairly sizable rally. And then if I'm forecasting one more cycle out after that, then I think we will fall apart probably as we head into the wintertime. The issue that the ECB is facing from a macro perspective is that if they raise rates, will it actually calm down inflation? And the reason Europe's situation is a little bit different is, of course, because of the war going on in Ukraine. As a consequence of that, there are simply supply side challenges that the Eurozone is facing that, yes, will affect the rest of the world, but will be felt most keenly in Europe. I mean, natural gas shortages are an absolute pain point It's a reality that's going to hit Europe in the winter. That's going to be potentially devastating, and that's not an inflationary situation that can be controlled through monetary policy. So the ECB is at risk of a major misstep if they act too aggressively, and the market will think it's going to trigger a recession. So even if the ECB raises rates aggressively right now to try and catch up with North America, it might not work. In fact, I would argue it from a policy standpoint, it won't work. It might lift the euro in the short term, but in the medium to longer terms, I just don't see anything that's going to lift the euro very convincingly. From a trading standpoint, we're getting, hey, we got into some pretty oversold conditions. We saw a reasonable bounce here in the euro, especially over the last couple of days. Could that continue into early next week? I hope it does, and I hope that rally gets sold, because I think that's the risk reward. I think that's where the risk reward equation is skewed most favorably. So if we have an opportunity to build a short position going into the ECB, I think that would be ideal. If not, it's okay. You wait for the announcement, you wait for the dust to settle, and then you see if there's a trade after that.
Yeah, absolutely. I think at this point, I'm definitely not wanting to, go build a position into the ECB. I mean, any central banks right now, I think it's tough to really go into these events with an outlook, because especially on the short outlook, as they could come as a surprise. So I think on Thursday that will be like I said, it's a do and die situation for that. And again, more of the rally we can have. I mean, this is a support line on the basket that you need to watch, because I mean, look at what happened with the breakouts that are happening on the basket. I mean, that's when there's a big movement in play. And I think the euro could be the next one to really be in play, not just against the euro US dollar, but I mean, if you take a look at pairs like euro Aussie, euro CAD, I mean, there's opportunity to be had in some of these euro pairings. So I do like the euro next week, regardless of what happens. I think it'd provide us a good trading opportunity. But outside of the euro, I mean, if you want to be short of something, I mean, look at pound. I mean, this thing is a -2. This has a after the euro, I think your pound is the one that's setting up for a nice little break lower. So this is where, when would it happen? I mean, who knows? We lot of back and forth that's taking place, but I think eventually it is heading lower. And I think at this point, if the velocity picks up, I think that's when you want to be short this pound. If the velocity is positive, then you want to back off. So, but I think I want to play it one way. I'm not really looking to play this both ways, because the pressure is more towards the downside than it's towards the upside. So I do like pound for the shorts next week as well. Now, let's talk about some of the other growth currencies that are actually kind of, moving in this short term. I mean, look at this CAD. I mean, CAD has been moving up quite aggressively, and you can see that. And this is where a lot of traders were kind of puzzled with the CAD move this week, because Bank of Canada raised rates. They raised rates not only as expected, but they actually raised rates more than expected. But then the CAD still pulled back, or were not even able to extend the rally. Well, this is where you have to kind of go with buy the rumor, sell the news. I mean, a lot of that is already priced in. I mean, since March, we have seen massive runs. So whenever you see a good news and the currency don't react, I think that's already a bit of a sign of question on that currency move to go higher. I mean, if you look at dollar and CAD has kind of, stayed pretty strong this whole time, but CAD hasn't really diverged as much from the dollar. And I think at this point, I'm looking for a short, and if I compare dollar and the CAD, I'll rather pick a CAD here, because dollar still remains strong. CAD is actually still pulling back a little bit. And now let's talk about correlations. Just like how we look at gold and we look at copper prices for Australian dollar. I mean, similarly, we look at oil and with a correlation with the Canadian dollar. Now, we have seen that outperformance in both asset classes, but then for almost a month now, the oil has pulled back 20-30% off the highs, but CAD has been holding up there. So I think at this point, what I'm looking for is failed rallies. I think that's what would give me an indication that this CAD move actually wants to go lower. I mean, on a 4-hour chart, we got a nice little pullback, a nice little rally here. And next week, I think I'll be looking at this little support here, and if this basket breaks that support, I think in the short term, there's a further downside risk. I mean, where we are right now, we are literally at the breakout point, and I think at this point we probably closed lower than where we were in the breakout point. So I think at this point, I would rather look at the bottom end of the range. And again, if you want to be waiting for moving averages to break, I think these two moving averages was going to hold up. And I mean, if you take a look at April, May, June, I mean, this is the ultimate test for the CAD. If it does break lower, I think this is going to provide a lot of good opportunities in the Aussie crosses, so in the CAD crosses across the board. So we'll take a look at possible prospects. But let's talk about growth currencies, Aussie and Kiwi. And now Aussie is the one that you can see that they actually stopped going down. And that's the one thing we need to pay attention to is despite that market volatility, these currencies actually are not making new lows. They're actually going sideways a little bit, which again, at this point, the trend score has become zero, and there's been uh, moments of velocity that is actually good. We have seen velocity on the downside and the velocity on the upside. But this is where I think the reversal in this Aussie and Kiwi will coincide with the reversal in the equity markets. And if the equity markets can get better, there's a little bit more risk on environment. I think there is a decent opportunity there. And same thing with the Kiwi. I mean, look at Kiwi has been the biggest underperformer, and despite their hawkish rate hikes, I mean, this thing has not been able to lift up. But this week, I mean, you can see that it's actually gone sideways. So for the last 2 to 3 weeks, and it's actually trying to break towards the upper side, and velocity is getting behind it as well. So I really like Aussie and Kiwi next week. And just to make a comparison, I think if the CAD pulls back further, there's a good opportunity in Aussie CAD and Kiwi CAD crosses as well on in conjunction with pound Aussie, pound Kiwi, or Euro Aussie and Euro Kiwi. But that's what I think. This is setting up nicely for next week. Imre, do you have any sort of word of wisdom on those two currencies?
Yeah, I mean, I completely agree with you there. I don't really have anything more to add. Potentially, really exciting opportunities, but patience is really the key here. I think next week likely is going to be all about the euro, and let's see if after the dust settles, if any of these growth currencies show signs of movement. Euro against the commodity currencies could be an interesting play as well, depending on how the broader commodity picture shapes up, and which in turn should inform us about what's going on with equities. But yeah, that's pretty much it. I think you and I are on the same page here.
All right. Well, let's take a look at some velocity scores and trend scores and see what we can expect for next week. I mean, dollar did pull back a little bit. Velocity's down, so let's just wait. I mean, dollar is into this +3 and a -2. I mean, whenever you get this mixed scores, then this is better to kind of stay on the sideways lay. I mean, yen is pretty clear to me on a bearish list. Swiss franc is going in as on the list here, but again, I'm still dubious on the Swiss franc outlook here, especially with the euro being in play next week. I am paying attention to both the euro and the Swiss franc. But the euro again, it remains bearish. The trend score is still bearish. So even though we're getting a bit of a shorter term bear rally in the short term, but I think we have to still wait and see. So I like the Aussie and Kiwi I put up in there. I mean, even though they're a zero, they could potentially move to a +1. If they do, again, I think that's a clear opportunity for possible longs there. Now CAD, like I said, I mean CAD is still a plus. It's still in the positive again. Right now, it's kind of a mixed picture. But if this trend scores start to weaken, if it goes from a 2 to a 1, and let's say if we get below those moving averages, I think that will be a clear signal for me to a bit of a change of that turn there. That's where you have to kind of understand the market's not going to stay the same way for the longest time. They will change, so you had to change with the market. So I think it was still pretty early, but next week give us a little bit more confirmation on that one. But I do like Aussie and Kiwi on further upside as well. And in the crypto world, I do like the Ethereum. As a bearish trades, I think euro, pound, and the yen. I think those three areas looks readily to move lower. So let's take a look at possible trades and then jump into trading view and then take a look at some charts. So let's actually start with some of the pairs that we discuss. We have Aussie CAD. I actually want to point that out there. I mean, we have seen a massive divergence. I mean, these are the currency pairs. Sometimes they're moving in tandem, and sometimes they do diverge. And you can see since March, I mean, there's a huge divergence between Aussie CAD and Kiwi CAD. They all growth currencies, but the CAD has definitely been outperforming the rest. I mean, I like the fact that we got a nice little reversal over here. This is a daily chart. Even on a 4-hour chart, you notice that Yeah, we got that nice little reversal taking place. If we can get a further upside, I think I do like the risk to reward ratio on these trades. I mean, look at a weekly chart. We're getting a nice little hammer candle as well. So I think in the next week, I do like Aussie CAD and Kiwi CAD again, but that will be contingent upon if the CAD can actually weaken. So that'll be my first line of attack. I'm getting a nice little end of the week. The candlestick here, I mean, daily chart, got a nice little reversal candle yesterday and it's holding most of the gains here. So I do like further upside, especially once we break that resistance over here at about 80.50. Stop around about 79.50. But I think as a target, I do like 80 to 50. So there's a good, decent risk to reward ratio on these trades. But then we need to see that correlation kind of turn around on those two currencies. Dollar CAD, I talked about it yesterday as well, and in the update, I mean, we got a massive breakout and a big pullback. But notice that this was a big breakout, and I'm actually happy to see that pullback because if you like dollar long, I think this gives an opportunity to actually be in this dollar CAD long. We got a breakout, we got a retest. So I think next week is important. If this actually falls further below, then the trade is off. If this holds this level and actually gets above it, because I mean, look at that 132, it almost pulled back about 150 to 180 pips. I think that could be setting up for a nice little reversal opportunity. So that's why I actually do like the CAD as a short next week because I think it could start to diverge from the dollar, the dollar CAD again. If this started to reverse and the Aussie dollar doesn't reverse, and if the Kiwi dollar holds, I think that will be a signal that we can go along the Aussie CAD and the Kiwi CAD. I mean, you can look at it. Aussie USD is setting up nicely to break higher. We got a resistance over here and same thing with the Kiwi USD. I mean, they have been in this massive downtrend here. But I mean, look at the parabolic SAR, we're just hitting right at that point. But I think dollar might be a little early call to get long, or this pairs to get long. But again, we can see if the CAD can take a bit of a charge initially. Outside of that, I know everybody has been kind of asking me about dollar yen. I think dollar yen path of least resistance. I mean, this is where it is. It's still running, and then this policy, unless there's a change from Bank of Japan. I mean, we have this event next week. Where we have the Bank of Japan outlook report. Again, all we're looking for, if you're looking for a regime change, it needs to come from Bank of Japan. And we will have to wait for either an intervention if the dollar yen actually gets above that 140 area. Again, remember, if we've been looking at charts from 1998, like every move then eventually will come to an end, and eventually this will happen. I mean, at this time, we kept running and running and running and hit at 145. It hit some extreme levels before the Bank of Japan has to come and step in. If you haven't seen the interventions, you have to go back in time. In even 2010 and 11, there were multiple interventions that actually took place right around here when we actually saw the extreme levels when the dollar yen was actually hitting new and lows here, and then eventually we got a turn. So I think you wanna be enjoying the ride until it actually gives a sign to kind of exit that move. I think that's a potential risk that I see with yen crosses, but make sure you're using the right stops for it. But outside of that, I think Euro USD is the one that we did wanted to pay attention to. I mean, look at that nice little break on a daily chart. So I mean, at this point, this is very directional and this is just a little bit rally. I mean, look at the support that it gave up. So maybe we'll see a bit of a rally early on the week, but I think the we need to be very cautious about buying the euro here because this is just maybe setting up for a bear rally. So pay attention to the news events next week. I think that will provide decent catalyst. But let's just say euro continues to weaken and you think euro dollar looks extended. I think there's good opportunities in currency pairs like euro Aussie. You can see there's a nice little support area at about 147.89. If it does break below, there is a decent opportunity. If we take a look at euro against the Kiwi, we're getting a very similar picture. We are seeing a pullback here, and if these Aussie and Kiwi start to strengthen a little bit, I think there's a nice little opportunity in these two pairing as well. So the big question really is what happens with dollar next week, and I think based on that we'll probably be able to decide which we want to go. But the fact that there are certain currencies, if you look at a 4-hour chart, I mean, they stop actually going down as much. I mean, like an Aussie dollar in the last few days, it has actually not gone anywhere. And same thing with the Kiwi. It has not really gone anywhere. So this is where I'm saying we could be getting a bit of a regime change. But for that, confirmation, higher highs and higher lows. That's what will tell you that maybe this market is looking for a change. But if you're looking for that ultimate direction, I think we are carving out a little bit of a short-term bottom, in my opinion. But if you really like dollar, I think dollar CAD. I like this, even though it's coming very late breakout, but I still holding this level, and dollar yen. I think those two pairs, those continue to pay attention to. But outside of that, I think euro is the one that will pay attention to. Imre, are there any pairs that you're looking at?
Yeah, I mean, we covered them. I see pretty much the same things in the Euro, Aussie, Euro, Kiwi pairs. Dollar CAD, very interesting. We covered that, and dollar yen as well. Yeah.
All right, well, good to be on the same page there. Yeah, so let's wrap it up over here and talk about the outlook here. So the conclusion, markets are again like to have found a short-term bottom. I think it's sideways to go higher is the path. So, as the market changes, you need to change with the markets. A lot of big movements have already taken place, but that doesn't mean it will continue in the same way. So what I'm looking for is looking for trend reversals. And for that, you need to pay attention to those daily charts and see if we start to test those 20, the 50-day moving average, and then use the 4-hour chart to keep an eye on the velocity. So I think there is good opportunities on the horizon, especially in the next couple of weeks as we get ECB and the Fed. I mean, great time to be active. I mean, right now, also keep in mind that we are in this seasonality pattern of summer trading, but I think overall the markets remain very active. So you have to pay attention to what the equity markets are doing, and you have to pay attention to what the currencies is doing, and not be married to an outlook. This is the market, like Imre said, this is traders' market. We need to adjust and change as quickly as the market changes. And with volatility, that's what happens. A couple of days, markets are down. A couple of days, markets are up. So you have to be able to make that adjustments. And this week is a great example where odds of CAD was strong early in the week and weaker in the second half of the week. So you have to make that adjustments. But if you stay married to one outlook, then you're really missing out on opportunities. So that's the thought of the day. But I think next week, as you look at the schedule, we'll be meeting live for press conference of ECB. So we'll be looking at trades live in the class. Outside of that, on Thursday, we also have this pivot point class coming out as well. And again, we'll be meeting as usual for the daily recaps and the midweek update. So thanks everyone for joining. Have a great rest of the weekend and the coming week. And let us know if you have any questions. Till then, take care.